Hey guys, how's it going? I'm gonna be waiting for Varun to enter the session. So I'm gonna be having a one-on-one with Varun today. So if you guys have any questions, I'm not gonna be able to see the chat, but you guys are more than welcome to sit in and see how I handle these one-on-one sessions with K² Premium members. So let me just get this stuff sent out. Let me send them a link. Let's send this over to our room. There we go. So see if there's any trades that are available right now for like any possible late entries. Let me scan through these real quick. See if there's anything here. Market volatility is super low because of the holiday week and just in general, because we're getting close to the end of the year. A lot of people are not trading right now. So you can see obviously the volatility is at an all-time low for the most part. All right, let me get a few more minutes. Just waiting for Vernon to enter the session so we can start the mentoring session. So let's see if he's on his way. Should have taken this GA entry right here. Price broke structure, got that sell signal. Could have been good. Hey, everyone, how's it going?
Yeah, Shawn, good. What about you?
Yeah, nice to hear. Nice to hear. All right, cool. So basically for this mentoring session, I'm sure you might know how it works. Basically you just ask me any questions that you have, anything that you're confused with, and I can pretty much clear up anything that you have. So to get started, is there anything you want to cover specifically today, or do you just have like a bunch of questions?
I have a problem with your 30-minute strategy from trend meter and proprietary system. So it's not working well for me. So can you tell me a new strategy that you use on 4 hour?
Yeah, sure. Which do you know which strategy do you like to apply, or is there one that you are having trouble with that you want to learn?
Yeah, the one I'm having trouble with. If you can, tell me how it works. Right?
Yeah, sure. Yeah. So which strategy is it that you want to look at?
It's a 10-meter strategy. When 10 meter is green and it gives a when a forex player gives a bullish signal, we take a buy signal and let the trading view do its RR work.
Gotcha. Okay, so let me pull up the I'm gonna pull up the course real quick. I'm just gonna make sure that we're looking at the same strategy. So are you applying the intraday strategy? Is it the momentum pullback strategy, the scalping strategy, the SR strategy, or the pivot strategy? Do you know which one were you having trouble with?
It's the I think it's the intraday trading strategy.
The official intraday strategy?
Yes,
Okay, perfect. And are you applying it on the 30-minute or a different time frame?
30 minutes.
Okay, perfect. Do you have a specific pair that you like to trade so we can focus on that one?
No, I trade all the pairs.
Gotcha. Okay. So which one are you having trouble with? So we can see like maybe you're analyzing it a little differently. So maybe that might have been the issue. But if we can look at the specific pair that you were having trouble with, maybe we can identify what was the problem, and then we can move forward from there. Did you have one that you were having trouble with, or is there one that you just want to look at?
Yeah, USD CAD.
USD CAD. Okay.
Yes.
Let's see.
I took 5 trades yesterday and 5 of them hit SL. Like boom to SL, and I just thought why it's not gonna work, right?
Okay, gotcha. Yeah, no, definitely. Yeah, so I was looking here. Do you remember which one did you take? Because it doesn't look like there was any entries since the 21st. So the last entry that was available using the strategy was here on the 21st, and it looks like it would have hit full TP. So I'm not sure if you're, if there's one that you took here that you might have done incorrectly, because it looks like there's no
Just
entries.
a second, I'll tell you. Just a second, I'll see it.
Oh, was that again, Ruben? Sorry, I couldn't hear you.
I'm saying just a second, I'll and tell you on my trading view charts. I'll just see. Just a second. It's on GJ2.
GJ? Okay, let me pull up GJ. So let me see GJ over here. So yeah, looking at GJ right here, looks like you might have taken this trade right here on the 24th. There's two trades right here. There's one here on the 23rd. This would have hit full TP right here for a gain of 85 pips right there.
Yeah,
This one right here, I wouldn't have taken this because this was on Christmas Eve. So, sometimes you have to take into consideration the market conditions because volatility was very low during this time, during Christmas Eve. And then you can see it started to drop at this point. So I think one issue right here would have been, one thing would have been the market conditions. Obviously, the volatility was low during this time because the markets closed halfway through the day. So it was about 6:30 a.m. Looks like it dropped right here, and then the market volatility just pretty much died down. So one thing that I would have done is I wouldn't have traded on this day on the 24th because it was a holiday. A lot of markets were already closed at this time during this point. So the problem with this sometimes is if the market's closed, I think the London session was closed already. So at this time right here, you'll have an imbalance in volatility, right? Because the Asian market is still open. So that's why this probably increased in volatility, pushing the JPY down, in strength. And then the GBP wasn't active during the time. So that's why there was more volatility in this direction. Another thing that you could have done differently is you could have used the K2SRs. This is one thing that's definitely recommended. So you can see right here, I wouldn't have taken this trade right here because the K2SR, there is a rejection point right here, right? So if I draw this point over here, and then you hide that again. So looking right here, if you were to take this trade, if you look at the requirements here in the video, right here on the intraday strategy, if you look at the version 3 right here, what's the most updated version, generally you want to have at least some cushion here before taking this trade. So looking at this right here, you only had about 15 pips. So generally you want about 20 to 25 pips for cushion for you to enter this trade, because the problem with this right here is if you enter this trade here, odds are price is likely to reject off this point, or it's already rejecting off it right here. So what probably happened here was it established a high here. So it established a high, it established a low right here, and then established a higher high right here. So from this point, what probably happened from this point is it would reverse from this point because it established a high, established a low, and then it established a lower high right here. So usually if it's doing a high-low pattern, it ends up going downwards from this point. So if you're drawing that at that point, it's usually going to swing down from here. So looking at this here, that's basically what happened. So right here, you can see the rejection point, right? Let me see if you can
so
see this right here. So like before you would have taken this entry right here, you want to make sure that there is some cushion here, because what generally happens if there's a rejection point right here, price will likely shoot up to that point, from here, and then it'll reject from here, right? Because it's a resistance point right here. So basically, if you took this trade right here, price went exactly to that structure like right here, and then from this point, it likely was to come straight down, and that's exactly what happened right there. So, are you using the K2SRs? I think that might have been your issue with these
Yeah,
trades.
I was actually using it, but I don't know how I took the trade.
Okay, yeah, because
Like I made a mistake, I think.
yeah, it might have been just small mistake. It happens because this is still new to you, so you haven't really been using it for very long. But it's
Yeah.
really important that you use the K2SR because right here, if you already identified this, you could have avoided this trade because it's so close to this point. Obviously, when it reaches this point, if it goes for double top or here one rejection, rejection number two,
Yeah.
odds are it's probably going to drop from there. But it's okay. You're learning from it. This is why I like to go back, and if you had some losses, it's good to maybe document them so that you can go back and figure out what could you have done differently. So right here we've already identified that this could have been avoided if there was a zone drawn there, so that you can see that this would have happened, and you could have maybe if you maybe even if you made the mistake in getting in this trade, you could have at least when it pushed up, you could have closed out with some profit or even a break even to avoid getting caught in this reversal right here.
Yeah.
Yeah.
I
So
get it.
I think that that might have been the mistake there, but it's fine. You learn from it. But looking here at these other entries, it looks like these would have hit as well. These would have been okay right here. So this would have hit full TP for maybe 73 pips, and then again this one right here for 85 pips. And then looking further down, I think that would have been it for the entries right here because there's just no volatility in the market, so it's indecisive down here. But it looks like the two entries right here would have hit, and then you would have avoided this one right here if you had this zone drawn previously.
Yeah. So I just got a buy signal on 30 minutes on US 30.
Yeah, exactly. Yeah. So if you get a sell signal and then it matches the trend meter down here for a sell, then you can enter the sell. Vice
Yeah.
versa, if you have a buy signal that matches the trend meter down here, green, green, then you can enter a buy. But
So
when
can you tell
oh,
me about the right how many pips should I aim for?
how many pips would you reach for?
Yeah.
Okay, so basically when I'm applying this strategy, what I do is I put my stop loss at the previous swing. So like right here, if I was to enter this trade, there's a couple ways to do it. So one way to do it is you can put your long position right here, and then you can place your stop loss at the previous swing, like slightly below it. Generally right here, it's about 36 pips. I would probably round that up to maybe 40 pips, like that, 40 pips, just so it's a full number. And then from there, I put my TP equal distance away right there. So
Okay.
that's one way to do it. Another way to do it is you can just use TradingView. You can allow it to do it for you. So you can just zoom out, uh, and then you can use a long tool and then just place it there, and then it'll calculate it for you right there. Or actually, let me zoom out again. Zoom out, use the long position tool, and then it will automatically plot it for you right there. That's another way of doing it. So you can either put it at the previous swing, or you can put it, you just let TradingView do it for you. And either way, it hits full TP either way. So like right here, I think, yeah, it hits full TP. And then again, right here, if your stop loss is at 40 pips, it obviously would hit full TP as well. So those are the two main ways to do it. But there's a couple other ways of doing it as well. So those are first two ways of doing it. In addition to that, you can use the pivots as well, or you can use the K2SR. So like if you want to use the K2SR, you can, it's kind of messy here on the 30 minutes. So generally when I draw my SR levels, I go on the 4 hour, and then I'll draw it like somewhere over here to this point, wherever that higher structure is. This might be a little too confusing, so this might be a little more complicated. I probably wouldn't do it this way, but unless you're like really familiar with the zones, because you can see there's a lot of lines here, so it's hard to really determine, what's important and what's not important. So if you go back to the
Yeah.
30-minute here, you can see that we have structure there. What I would want to do is maybe identify the lower structure from that point, so that you know where to put your stop loss. Here, there's too many zones, so I'd go in the higher time frame, and then I would draw this lower zone right here. So if I draw this lower zone right here, I go back to the 30-minute, turn off the SR. What you can do here is you can place your long position there. You can put your stop loss either at the swing, or you can put it at the previous zone right here, or even below it, somewhere a little farther below. That's another way of doing it. But obviously
Okay.
it might be a little more complicated. So maybe don't do this yet. Maybe focus on the first two ways that I showed you. Put it at the swing, or put it let TradingView do it for you. Because if you do it this way, it's more subjective. There's more room for error here, because as you can see, it still hits full TP, but you might be confused as to where to put your stop loss. Like maybe you can put it here, maybe put it below for 100 pips. I mean, that works too. But the problem with this is that there's going to be more, it's going to take more work for you to identify, where to put your stop loss. So I think I would recommend that you just put it at the previous swing first. So when entering this trade, you can either put it at the previous swing right here in a long position. The swing is, slightly below here. You round it down to 40. So that would be number one. That would be one way to do it. This is one way that's recommended. Or you would just let TradingView do it for you, where you zoom out, you click the long tool, and then you place it right over there, and you let it just pretty much calculate it for you. When you let TradingView do it for you, what it does is it places your stop loss at the previous swing, and then it adds the average true range. So it gives you some
Okay.
cushion in between, where the swing is and where the average true range is. I think this wouldn't be considered the swing actually, because it's too close. So the way that TradingView identified it identified this as a swing right here. So this was the swing that TradingView identified. And then on top of that, it included the average true range right here. So it gave you the swing plus an extra 11 pips right there to include the average true range. And this would be a lot more accurate versus, I trying to guess if this is a swing, if this is a swing, or if this is a swing right here. Because even
Yeah.
myself, right, when I showed you the example, I didn't even identify this as a swing, but TradingView identified it more correctly for us.
Yeah, because there's a high on the previous.
Exactly. Yeah.
That's
Yeah.
because
Yeah.
TradingView said that it was a swing.
Exactly. Yeah. So it's better. I prefer to just let TradingView do it. But if you're gonna do it, sometimes the only problem is sometimes they'll give you a swing that's like super far. Like sometimes if the swing moves from like even this looks like it's a bit far compared to where I would have identified it if I was looking at this as a swing. But obviously TradingView knows more more than us, and so I usually allow TradingView to calculate it for me to have a better range compared to where I would identify it.
Yeah.
Yeah. So yeah, that's one way of doing it. How do you normally do it? Do you usually just let TradingView do it, or do you
It depends. If
depends?
TradingView is giving me like 50 or 60 pips, I'll do it with TradingView. Or if it's giving me like 80 to 100 pips, I'll do it myself.
Yeah, exactly. So I do the same thing. So yeah, we're on the same page with that. But yeah, I usually let TradingView do it first, and then if it's too wide, then I'll just do it myself. And it usually works pretty fine. Like even right here for these entries over here, it looks like these entries would have won as well. I think this is another one right here. This looks like it swings kind of low, kind of high on that. So probably around 60 pips. This looks like this would have hit TP as well. Yeah, it would have hit TP slightly before it ended up coming back down. This one right here looks like it would have hit stop loss, but let's see if there's a way that we could have prevented that. So if we go back over here, I turn on the K²SRs. Yeah, it looks like there's a zone right here. So we would have avoided this one over here. And that's
Yeah.
one way to, possibly avoid these losses right here. So if I went back to here, yeah, we probably would have skipped this trade here. This is a good one because it's far away from it. But for this one over here, it's only about 10 pips away or 11 pips. So it's not really worth the risk because, like we mentioned before, generally if it reaches this point, it likely rejects off it. So if we scroll forward right here, you can see it tested the zone right there. And then as soon as it tests the zone, it ends up coming straight back down. So that's why it's really important that you look at the K²SR zones, because you don't want to get caught in these reversals. This is like one way to avoid a lot of these unnecessary reversals that we might run into.
Yeah.
Okay, cool. Yeah. So, do you have any other questions that you want to look at, or any other strategies, or anything else that's maybe confusing to you?
Now everything is pretty simplified, but yeah, it's good. The indicators are good.
Oh yeah, yeah, no, definitely, yeah. It's just gonna come with practice. I know you've only been using it for like maybe a couple of weeks now, or maybe not even a full week yet.
Yeah.
Um, like the more you practice, the more you'll understand it, and then the more that you run into errors. It's kind of good when you run into these mistakes because it'll help you understand, what to do next time, so that in the future you won't run into the same mistakes again.
Yeah. So can you look at your study right now?
Yeah, sure. It's pull BS 30. Here we go. So I'll just pull it up on this chart so it's a little cleaner. There we go. All right, so we got US 30. Do you want to look at it on a specific time frame or
Like, can I use it on 30 minutes time frame with the same strategy
oh
for
the
scalping and yes,
yeah, the intraday strategy?
yeah,
Okay, yeah, you could. You can use it on any time frame, really. There's no specific time frame for you to really use it on. Using it here on the 20-minute actually looks very good. Uh, yeah, it looks like if you took this entry here, this would have hit full TP for about 1,300 pips.
yeah.
Again, right here, this would have hit full TP for another 1,300 pips. And then again, right here, if you took this one, another 1,300 pips. And then again, right here, 1,300 pips. And then it looks like there's a couple other entries here that might be getting close to TP as well. This is still pending. It's about 1,000 pips. Looks like almost there to full TP. And then again, right here, one more entry, which is currently in profit on the way to TP right there. I personally haven't used this on US 30 because I just use the other ones that I apply, but it looks like it works pretty fine on here too. This would have been, we skipped this entry to invalid signal. Um, this looks like this might have hit stop loss or maybe some profit. No, this would have hit stop loss. And it looks like this would have hit stop loss too. But I think these might have been, we could have avoided these if we turn on the SR here. Let's see if there are some zones in this area over here. Yeah, so looking at these right here, we probably would have skipped these two trades over here. So we have a zone right here. We have another zone up here as well. So if I take this off right here, this, yeah, it looks too close because the spread's about 400 pips. So if you were to take this trade here, yeah, it's too close. It's only 15 pips. So you would have, it's too close to take this trade. Also right here, looks like it's a little close to the zone as well. Yeah, 18 pips. The spread's about 440 to 30 pips. So it just I wouldn't have taken these two trades right here because it's so close to the resistance.
Okay.
Um,
So when it's close to the SR support or resistance, it's like 400 pips. So we didn't take a trade, right?
yes. So depending on what the spread is, so this spread here, it says 3, but in reality, it's really like 30 pips or 40 pips. Generally, you want to calculate that into your move because, so like right here, for example, if you're to take this trade right here, let me do price range. Yeah, so this price range right here is about 19 pips, right? So if you're doing 19 pips, you have to cover the spread both ways. So technically, this is going to be 190 pip move to the, so it's going to be 190 pips to resistance, right? If you're going to enter this trade, your spread's going to be about 40 pips spread. So when you enter this trade, you already go into trade negative 40, right?
Yeah.
So yeah, when you enter this trade right here, you have this right here, 19 pips. You're already going to be in the negative already somewhere around here because you have to incorporate spread plus your entry time. You're not going to enter right away. So once you enter this trade, you're already right here in the negative. And then on top of that, you have to exit the trade too. So you add another, 5 pips to that as well. So entering this trade right here, you technically go in the negative about 100 pips. So you're already in the negative up to here. You see where this would be your technical entry right here. So this would be your entry point because you're going to factor in the spread. And the problem with this is that there's only so much space between this area and the resistance right here. So I would probably keep maybe, I'm trying to think what's a good 50. I would like at least maybe 400 or 500 pips from the resistance before you enter it, because you want to have some cushion so you can make some profit, cover the commissions. That way, you know, if you need to break even, you can still break even if you like to. But right here, it's just not enough because this is only 190 pips. So you're paying about 100 pips to cover the spread to get in and out of the trade. On top of that, you can only have maybe a 90 pip profit, which is not going to be very much money, you know, if you're
Yeah.
if you're trading US 30. So I think the sweet spot would probably be at least have some cushion of maybe 400 or 500 pips before entering a trade. So that right here, let me see. So if you have at least 500 pips, which would be up here. So this would be a lot better. If you have this much space right here, you can, you know, you can cover the spread for about 10 pips right here. This would be your spread. And then you still have room for profit from here all the way up to here. So you can still lock in maybe 300 or 400 pips in profit before you move your stop loss in profit possibly, maybe as it moves up, you know, as it slowly moves up this way, because you're going to enter at this point already anyway. So if it slowly moves up from this point, you can reach halfway to TP. You can move your stop loss in profit. That way, if price ends up going up further, it'll probably hit your TP. Or if it does pull back, at least you get stopped out in profit, and then you just move on to the next trade. So
Yeah.
I
Yeah, I
think
get it.
I think the good sweet spot maybe would be 400, 500 pips. That way you can at least move your stop loss in profit, because if it's too close, similar to, let's see what happened here. Let me move it forward and I'll see what happens as price moves along. So you can see how it rejects off that resistance, right? It's very important that you identify that resistance, because if you fail to identify that and you took this trade here, looks like you might have, you know, it might have reversed on you from this point.
Yeah.
So that's kind of what happened here. It looks like it pushed up slightly above it, but since there wasn't enough room for you to move your stop loss and profit, you might have, yeah, it might have reversed on you, and then you would have lost the trade.
Okay.
Yeah. So I think about 400, 500 pips would be good. It'd be about 40 or 50 points. If you're looking at pips, that'd be 400, 500 pips.
Yeah.
Just that way you can cover, you know, the spread, and then you can get in and out of the trade without much problem.
Yeah, I actually aim for around 100 points, 1000 pips.
Yeah, definitely. That's good, because I like, usually my sweet spot if I'm trying to scalp or make decent, you know, some profits off US 30, I think 500 pips is good. If you're taking a decent lot size, that can lock in
Yeah.
some profit. And then if you take a bunch of wins, then you know, obviously those wins will add up, as long as you avoid these like unnecessary losses right here.
Okay.
Yeah, so it looks like it works well on 20 minutes. I've never tested on 20 minutes, so this is brand new to me, but it looks like it works pretty much fine. It does work on all time frames, so there's no specific time frame that it's good for. Obviously, it'll be better on the higher time frame because there's less noise, you know, there's not as many false signals. But if you you know, at least use the zones, you can I think you're still fine, because you'll be able to identify these rejection points and not get caught in any of these reversals right here.
Yes. So I tried a strategy with RSI and it worked perfectly for me.
Oh, nice. Yeah, definitely. Yeah, that's one thing that's good too. So if you have other, you know, if you've learned other things, you can also tie it in with the K2 indicators, and it works very well. So for the RSI, do
Yeah.
you use it for like oversold, overbought?
Yeah. Actually, if it's in a uptrend, I take for oversold and I just buy on oversold and it goes shoot back right up and it hits around 130 to 140 pips.
Nice, nice. Yeah, no, it looks good. It looks like that could be easily applied here, because it does look like it applies very well. Like if you don't use the trend meter here, looks like right here it's overbought. So overbought, you have the sell signal right here. You take
Yeah.
a sell position, and then you pretty much hit TP at some point. Over here, TP would probably be a little bit closer if you're scalping, maybe 130 pips or 1300 pips. Uh, yeah, that looks good right there. And then same situation over here. It looks like it's overbought or an oversold, and then followed by a buy signal right here. It looks like it works very well as well. Yeah, it's pretty good. That's good. That's good that you understand how these other indicators, other strategies work. Because the thing with the K2 indicators is that it can be applied to any strategy. Like for right here, you're already using the RSI, and then when you identify the momentum swings, it helps you in identifying these good entries because it does look like it applies very well. Right here it's oversold, followed by a buy signal right here, and that would have hit. She was a big move right here. I don't know if I would have taken this for a buy because for this, it'd be going against the trend. So I don't think I would have taken a buy off this. But it looks like, yeah, if it was oversold here and it was followed by a buy signal somewhere down here, then it looks like it could have played out very nicely.
Yeah.
Yeah, that's pretty good. Yeah, no, that's a good thing that you're using that. I think, yeah, if you're going to apply that strategy, I think if you factor in the trend meter as well, it definitely helps you to avoid getting in on bad trades. Like for right here, you see it's oversold, it's overbought. Even right here, it's overbought, but then you have a sell signal. I probably wouldn't take the sell because the trend meter is green, so it kind of conflicts.
Yeah, I actually look at that. When it's oversold on a uptrend, I just then I buy it, and when it's overbought on a downtrend, just I sell it.
Nice, nice.
It's
Yeah.
like, yeah,
It looks like
I
it. Yeah,
don't
it looks like it.
use it both ways.
Yeah, definitely. You trade it both ways. Yeah, no, definitely. It does look good. It's something that maybe I'll start to look at too because I didn't. I've used RSI a long time ago. I stopped using it, but I do use it sometimes for like specific assets, like stuff that it works on, like stocks or US 30. Something an index fund that is based off
Yeah,
a limited quantity. It looks like it works pretty well. So it looks like you found something that works very nicely with this. Um,
like RSI gives me like sniper entries.
oh yeah,
There's
yeah, no,
no
definitely.
drawdown,
Mm-hmm.
and there's like only there's profit and no drawdown. But RSI gives me around 1 or 2 entries per day. It's not giving me enough entries. So if I miss it, so if I miss those entries, I just miss my whole day.
Oh yeah, yeah, definitely. Yeah, no, that's what I do too. Like that's why for my Forex, I have the 4 hour chart. So that gives me, longer trades. But then for my US 30 entries, it gives me like some sort of sniper entry as well. So like those balance out. So like sometimes when I don't have trades throughout the day, I can just take the US 30 and then it works pretty well. So that's pretty good that you apply this because it's good that you come in with like, some knowledge where you're able to pretty much apply this on your own. Because I think even here when it's neutral, it actually works very well. Like right here where it was oversold and then followed by a buy signal, this would play out very nicely right down here. I'm not sure if do you usually trade it when it hits when the trend meter is neutral?
No, I didn't trade it when trend because it can go sideways,
Yeah,
right? It can
exactly.
be choppy and it can go sideways. So it's like
Too risky, right?
yeah, it's too risky.
Yeah, because it looks good here actually. But the ones that you were applying right here where it goes oversold and then buy signal turns green, looks like yeah, all of these trades would have hit pretty nicely. Yeah, this is probably something that I might take a look at. I just for myself as well, just when I want to take some scalping entries because it looks like it works pretty well. Like even if you apply these right here, where it's green and green, looks like it plays out very nice. And I like the 20-minute time frame too. I was surprised that you use this too because not a lot of people use the 20-minute. I usually like the 10-minute and the 20-minute. They both work pretty well with US 30 because if you go on the higher time frame, like 30-minute and 1 hour, it it moves too fast. So it's just too risky if you want to take a bigger trade. Or instead of taking, maybe couple hundred pips, maybe 1,000 pips, if you go on the higher time frame, like the 1 hour, it moves like 2,000, 3,000 pips. So it becomes a lot more riskier than I'd like.
So which time frame do you use?
That I use. I use I usually use the 4 hour for like my Forex trades, and then for US 30, I usually use the 10 minute if I'm scalping, or if I'm using the daily entry, I usually use the 10 minute. But if I'm taking like longer trades, I usually trade between the 15 minute and the 20 or 25 minute. Usually here, I use the 25 minute. I like whole numbers because they're easier to follow in between each like hour and 4 hour candle. Because the thing with the 20 minute, it's good too, but I feel like with the 20 minute, it doesn't really it gives more false entries than if I was to trade on the 25 minute uh,
Yeah.
for right here. I mean, but it really depends on what you're trading. You know, if you're trading US 30, the lower time frames are fine because it's so volatile, it moves very fast. But if you're trading, Forex, it's you don't really see that many good moves on the 20 minute or on the 25 minute, something like that. It really depends. It's very asset specific. So depending on what you're trading, for US 30, it looks like the 20 minute actually looks very good. So it's maybe something I might look into uh, in the future. But I usually like to use the 15 minute, which is it's pretty close to 20 minutes. It's not very much different. Like right here, you can see there's a lot of entries for these buys. Here, if I go on the 15 minute, it looks pretty much kind of similar. It's just a little more spread out.
Yeah, there's not much difference between them actually.
Yeah,
It's
exactly.
all same.
Yeah, exactly. I never really use the 20 minute like too often, but now that you showed me, I think it looks better because like right here, the 15 minute, there's a lot of consolidation, like right here, consolidating a lot of times. But looking at the 20 minute here, it looks like it has a little bit more movement versus the 15 minute, which is good.
Yeah, because there are less candles actually.
Yeah, exactly. Less candles, and then it's easier to have a more valid signal when you get one.
Yeah.
Because yeah, it seems here these are pretty smooth. If you have all these buy signals here, they're like we looked at earlier, they all hit TP. Looking at the 15 minute here, there's uh, there's more signals, but it looks like you would have been holding them for a longer time. Like right here, it wouldn't have hit TP until maybe into this trade.
The weekend,
Yeah,
I
3 days.
think.
I'm not gonna hold this for 4 days for me to
Yeah.
TP. Uh, so yeah, no, that's good. That's something that I'll definitely start looking at, maybe the 20 minute if I'm looking for intraday trades for the Dow 30.
Yeah.
Yeah, that looks good. Let's see. So is there anything else you want to cover today?
No, there's not anything else actually.
Nice, nice. Yeah. So yeah, I'm glad we covered that. With your intraday strategy because now you understand that the SRs are actually pretty important. Have you looked at the version 3 or you just look at the version 1, version 2?
No, I look at the version 3.
Okay, gotcha. Yeah, a lot of people don't
I'll
really.
yeah, I look at all the indicators in your course.
Mhm.
So yeah, I'll find the intraday strategy pretty attractive, so I use it.
Nice, nice. Yeah. Yeah. I think the most important one before the momentum one used to be the most important one because that's where we based our entries. But now that we, like now more focused on trying to eliminate losses, the K2SR, it helps a lot. Um, because it helps us instead of taking, high volume trades, it lets us take more sniper entries where we're not going to take trades that are too risky.
Yeah.
So I think, yeah, definitely, it doesn't matter like which strategy you're applying. I think the SR is always going to be important just to identify the zones. Generally, what I do is I like to mark up the zones first, or I go on the higher time frame like the 4 hour or maybe even the 1 hour. I'll just identify these zones on the chart, and then once I have these on the chart, that's when I'll go to say the shorter time frames like the 20 minute like you were using, and then from there I can identify these rejection points. So I'll do that. I'll hide the indicator, and then from there I will go down to say the 20 minute like you were trading, and it helps a lot more when identifying these little zones here. So that's usually how I personally do it.
Okay.
Yeah. because well, it's different for US 30 because obviously US 30 moves a lot faster. But for Forex, I like to draw it on the 4 hour. Maybe on US 30, it might be better to do it on the 1 hour because the zones are kind of too far out. So just drawing them here on the 1 hour, they actually look pretty decent as well. I think they're a little more concise if you're drawing these on the 1 hour. So I would basically draw these on the 1 hour, and then after I'm done drawing these, you can go down to the lower time frames, and then you can identify from there. So if you have this on the 1 hour, go down to the 20-minute, and then it kind of cleans it up a little more.
Yeah.
Yeah, but I mean, it really depends on how you want to do it. Like if you don't like to draw the zones, you don't have to, but it'll definitely help if you want to identify, areas of rejection, prior to entering these trades. But then if you want to take high volume, you don't even need to use the K²SRs. You can pretty much just take every trade, and then, you'll just, the wins and losses will balance out at the end, depending on, which asset you're trading for the most part.
Yeah, I got it now. So yeah, I thought that it was good that I was seeing the SR, and I think that there's a momentum pulling upwards, so it will break that.
Oh, for this on US 30?
No, on Forex actually.
Oh, on Forex, yeah. Yeah, I feel like on Forex it's a lot more accurate when identifying the K²SRs because it's a different type of asset. It ranges. So when that happens, you can see that it's very clear when you draw the zones on here. You can see that it usually bounces from zone to zone. It goes like from rejection to the next zone, and it pretty much just bounces around. In comparison to something like US 30 that moves very fast, and it most of the time it just breaks through the zone.
Yeah.
Yeah, so let's see. Yeah, so is there anything else that we should cover today? I'm not sure if you have any other questions. I'm just going off pretty much whatever you have to
Yeah.
cover.
Yeah, that was all.
Okay, cool, perfect. Yeah, definitely. If you have any other questions, feel free to let me know, and we can have another session. I basically just want to help you out. If there's anything that you have issues with, or like today, we already covered, one fix to that one issue that you're running into. If you have any other questions, just feel free to reach out. We can set up another session. Since I think you have unlimited sessions, so you should be good. Whenever you have questions, we can hop back on.
Okay.
All right, perfect.
Yeah. So there are not many questions, not other questions, but yeah. Like I was thinking. Just a second. Like, can I use it on UK 100? This
Yeah.
strategy.
Yeah, you can use it on any asset really. It's as long as there's momentum in the market, and you can use pretty much on anything. So UK 100 is actually one that's it works good on because it's a highly volatile asset. So if you're trading it on UK 100, let me see if I could pull it up here. Yeah, it looks like it works perfectly fine here as well. Like right here, we have a sell signal matches with the trend meter right here. If you were to take this entry right there, it would have hit full TP right there. It hit full TP down there. And then again, right here, another sell with the trend meter down there, red. You enter that, looks like it would have hit full TP as well right here. Again, right here, sell signal matches the trend meter. Take that right there, full TP again. And then again, right here, another one, short position right there. Looks like this might have hit stop loss, or I mean, if you move your TP and profit right here, if it reaches maybe 50% and you move your stop loss and profit, then you probably would have gone out of this trade in profit as well. So it looks like if you took all of these trades here, this would have been full TP, full TP, full TP, another full TP right here. A partial TP if you move your stop loss and profit. But either way, if you let this run to full TP, you would have had, 3 wins, 1 loss right here, and it would have balanced it out at the end of the, see, on the 21st up until the 20s. Actually, just one day. So if you trade this just one day, you would have had 1, 2, 3 wins and then 1 loss. So they're about 600 pips each. So 600 times 3 minus 600, you still would have been in profit of 1,200 pips for UK 100 trading this on the 20-minute. So it
Yeah,
looks like it works well on here as well.
the pip count of UK 100 actually counts differently, right, from US 30 and all.
Yeah, it's a little different. I think it's worth a little bit more because they're not micro lots. Like for US 30, they're micro lots. They're worth a little less. I mean, on US 30, they're worth a little less because it's more pips. But for UK 100, I think these are standard pips. So this actually would have been worth more. So even though it's 1,200 pips, it's not going to be worth the same amount as US 30, where it
Yeah,
would
it's
probably
multiplied by 1.5 or 1.7, I think. Like,
exactly
yeah, no, it's multiplied by 1.35. Yeah, exactly
1.35.
1.35.
Nice. If you multiply by 1.35, let me see, 1 times 1.35. Yeah, you'd actually lock in 1,600 pips. So you'd make a lot more profit trading this as well if you wanted to trade this during, London session. Looks like all these trades came in during London session as well, because this came in around midnight. This is when London opened, and then all throughout London session and further. So through London session, New York session, right here, and then again right here in Asia session. So if you traded the whole day UK 100, it would have hit some nice profits that right there as well. A gain of 1,600 pips, which is pretty good on here as well. Let's see if there's any other trades here. Looks like that was it for that day. Going back right here, the market wasn't really trending very much. Right here, I might have not taken these because it looks like the market was actually in consolidation. So if I go back over here, just rewind to that point. If I turn on the K2SR, yeah, so I wouldn't have entered these trades over here because it looks like there are zones right here. So if I draw that right there, I hide that. Yeah, it looks like all of these entries over here that ended up, swinging back, they were right at resistance. So we would have avoided these right here. This would have been, let me see if it would have won anyways. Actually, if we took this trade here, it still would have won. But depending on how careful you want to be, if you want to use the zones, you could have avoided this trade. Looks like this might have been a loss. So this is something that I would have wanted to avoid. And then again, right here, this looks like this might have been a loss as well. Yeah, so I probably would have wanted to have avoided these trades right here since they were so close to resistance.
Yeah, I
Uh,
understand. So,
yes.
do you recommend that when this like US study opens all day, but there's New York session from 6:30 to I think 1.
Oh, like when to trade UK 100
Yeah.
and US 30.
Yeah.
Yeah, so I personally would trade it closer to the actual session time. Like, obviously you're trading a European asset right here, the UK 100. For this, I would probably recommend trading it during London session into New York session. So like from right here, that would be, let's see, midnight was around here. So this is pre-London session. So this right here, you could probably take these trades from this point up until maybe this point right here. Yeah. So just this area right here, this is probably when I would trade UK 100. And I would trade the same thing for US 30 as well.
Okay.
Yeah, so like
So,
right,
do you take trades on neutral trend meter?
what was that? Sorry, I couldn't hear you.
I'm saying that you take your trades on neutral trend meter.
Oh, on the trend meter, using the trend meter down here.
Yeah, when it's neutral.
Oh, and it's neutral, yeah. Um, Depending on which strategy you're applying. So if you're applying the intraday strategy, then yeah, I would avoid the neutral trades because like we discussed earlier, looking at the Let me just delete their RSI so they have space. So looking at the chart right here, basically when price is trending, you can see that there's some actual movement, right? So right here, the trend meter is red. You see some nice movement. Price is moving very nicely. When the trend meter is blue down here, you see a lot of consolidation. So basically during these times, I wouldn't really want to trade it because you don't want to get caught in a trade. Like say if you take a trade right here, London Open, right? It's blue. You take it during London Open. Say you want to take the sell entry right here. If you were to take this trade, you might get caught in this movement up until it just consolidates for, let's see how long. Consolidates for maybe one whole day, maybe 1 or 2 days. And then all of a sudden it breaks out the other direction. So I personally wouldn't trade it when it's consolidating, depending on which strategy you're applying. But if you're applying the daily entry, where we usually take the first entry after market open, that'd be fine because you're going to be taking the momentum when the market opens. So for that, I wouldn't mind if it's blue down here, but if you're taking the trades for using intraday strategy, I wouldn't take it when it's blue because you don't want to get caught in a trade when it's just going sideways for a long time. Like say if you're taking a sell here, you're taking a sell at this point, and it's just going sideways, and then all of a sudden it shoots up and then it stops you out, right? Like right here, it goes sideways, and then all of a sudden you just have a spike up. You don't want to get caught in a trade like that. So I personally wouldn't trade it when it's blue if you're applying the intraday strategy. The only time I would apply it if it's blue is if I'm taking the daily entry. But you can see right here, the daily entry didn't happen until, so it was blue right here. London Open was right here at midnight, my time, right there. And then as soon as we have the sell signal right here, that would have been the London entry if you were to take this specific one here. But I don't think this one was taken that day. I think there was something going on the 18th. So yeah, it would be strategy specific. Depending on which one you're applying, that would be the your decision to take it or not. But I personally wouldn't really take it if it's blue down here, unless you're trading something like a reversal strategy or some sort of ranging strategy where you actually want it to be ranging.
Okay.
Yeah, so that's basically how I would do it. It really depends on which strategy you're applying because sometimes it works, sometimes it doesn't. But it would be very strategy specific.
Okay. Yeah.
Yeah, is there anything else that you applied on? You can pretty much apply it on anything, really. It doesn't matter what you want to apply it on. If you want to apply it on commodities like oil, gold, silver, you can do that too. If you want to apply it on, any Forex pair, works on there. The main thing is you just want to make sure that there's volatility. Like you don't want to trade something that's just flat and it's not moving because then you can't catch momentum. But if you're trading something that has, decent movement, then it can apply on anything. If you want to apply it on UK 100, you can do it on there. You want to apply it on NASDAQ 100, you can apply it on there. You can apply it on the Spain 35. It works on there as well. It just really depends on what you want to apply it on. But you just want to make sure that there is movement in the market. Like the market's actually moving and it's not just going sideways. Like right here, I probably wouldn't want to trade this because it's just going sideways right now. But if it's actually moving, like right here, then it would actually provide for some decent entries. But it just really depends on what you what you want to trade specifically. Like you can basically trade on any indice, any stock, any Forex pair, any commodity, as long as there's volatility in the market.
So, do you trade other indices too?
What was that? Sorry.
Do you trade other indices too?
I personally don't. What I like for me, what I've learned like over the years is like you should just focus on maybe 1 or 2 indices, or maybe one or for Forex, it's different because all the Forex pairs, they kind of go back and forth. Like there's some times where certain Forex pairs will be moving, and then there'll be certain times where some Forex pairs are just not moving at all. So that's why I have a big watch list for Forex. But for indices, I just focus on US 30 because, obviously I trade during the New York session. So this is one that I can focus on. For indices, I recommend just focusing on 1 or maybe 2 indices that you really like to trade. There's no need to trade all of them because the difference between Forex pairs is that they all move a little different. When you're trading indice pairs, they move the same. So if you're trading US 30, it's going to move the same as like S&P. There's going to be slight differences, but it's going to move pretty much the same thing. So you're better off just focusing on one indice and then mastering it so that you can increase your odds of winning. And you can compare like the US 30 to the S&P to the German DAX. So depending on what session you're trading. If you're trading London session, then trade the DAX. If you're trading US session, then trade US 30. If you're trading the Australian session, then trade the Aussie. Just focus on one that's specific during that time because you want it to be volatile. Like you don't want to trade it when it's dead. Like you're not going to want to trade Aussie during like late Asia session when it's like Tokyo session, right? Because it's just going to be moving slow. If you trade it during US session or London session, you're going to see some nice movements, but you don't want to trade it on, during a session when it's not really active. So what I recommend is to just find one that you really like and then focus on that specifically. So if you want to trade US 30 and you like to trade during London, New York session, then just focus on that, master it, and then be very good at that. I personally don't trade anything else besides US 30 because I only trade during New York session most of the time. I trade during Asia session, but just Forex, not necessarily US 30 because then the volatility just dies down once we enter that session.
Okay.
Yeah, but it really depends. Like I'm not sure do you normally trade US session or do you trade London session too?
Yeah, actually, when there is London session,
Mhm.
I live in India. So when there is London session, it's around 1:30 p.m. Right?
Oh, gotcha.
So yeah, it's pretty much yeah, I trade London, and then when London session closes, I just switch to New York.
Nice. Yeah, you have the perfect time. I wish my time zone was like that. For me, it's midnight, so I'm asleep at that time when London opens.
Yeah.
For you, it's good because you have the best sessions. I think London is probably the number one session because it's the most volatile. And usually during London session, if you trade from London into New York, it usually continues that volatility. So you'll see the movements during London, and then from there it continues on to New York. So it works perfect for you if you want to trade those two sessions. I think that definitely is beneficial to your trading capabilities because you have the best sessions to trade in.
Yeah.
Yeah, I tried to figure out strategies for the Asia session, but it's just, the market most of the time during Asia session doesn't even move. So it's really hard to figure out strategies that are very consistent and that work long term. Because most of the time when I trade during Asia session, it usually doesn't hit until like London session. Like I'll take a trade during Asia session, mid session, like maybe around now 5 p.m. And then it'll just be slow, and then all of a sudden London opens and it just spikes up to TP. So that's usually how I call those trades. But for the most part, if I could trade London, I would do that as well. So you have a pretty good session. And I think it would just depend. So it depends on your account. If you have a small account, obviously, US 30 is going to be harder for you to trade. But if you have a bigger account, then it doesn't really matter. I would probably focus on US 30 and UK 100 because I think those are the most profitable during London into US session.
Okay. Yeah. So I have a $5,000 account on which I trade Forex and a little bit of US 30, right? And I'm planning for my new FTMO,
Nice, nice. So are you, which account size are you going to be doing?
like 50K or 100,000.
Okay, cool. Yeah, no, that's perfect. Yeah, if you do that, then I mean, you just have to calculate your risk for that. Like for US 30, it depends on how often you trade it. For me, I just trade it once a day. So that's why when I trade US 30, I take I don't take max lot size, but I take a decent amount. I usually take a 15 lot. So like for me, I take a 15 lot, 1.5 times 1500. So my risk is only 2025, 2250. The max loss for the day is 5,000. So it keeps me well below. I could still lose an extra 2,750 um, in order for me to, reach that threshold. So depending on how you trade or how many trades you decide to take, your lot size is going to vary depending on that. But I'm sure you understand how the calculations work, right? For FTMO.
Yeah.
Okay, yeah, so you should be good. Yeah, I think yeah, well, you know, once you practice this more often, I think you'll be good. You should be able to pass FTMO pretty easily. That's how most people in K2 pass it. They just trade US 30 with me every morning, and then they just use the calculated lot size. But if you want to trade more sessions, which is available to you, you can make a lot more profit that way. You just got to make sure to control your risk. Don't take anything too risky.
Yeah, actually, that's it.
Yeah, I think that's probably that's the biggest problem with a lot of people who take FTMO. One thing to just keep in mind is to don't overtrade. A lot of people, they want to take like 20 trades a day, and then they always hit the daily max loss on accident. They don't realize that their drawdown is so heavy, and then they ended up losing the account. But I think you should be fine as long as you're staying focused on your risk, then you should be good for the most part.
Yeah, I think that FTMO is all about risk management, right?
Yeah, exactly. The main thing with FTMO is as long as you have a profitable strategy, that's at least above 50%, you can pass. It's very easy to pass as long as you use proper risk. The main reason why a lot of people don't pass is because they just don't use proper risk. Like sometimes they'll use too big risks, they'll go too deep into drawdown, and then they can't get out of it, right? Or sometimes they have too many trades and then they don't understand the risk and they end up hitting their max loss. So as long as you don't fail those requirements and you just stay within, proper lot size and you just take every trade, as long as you have above 50%, you should be able to pass pretty easily. Like even right here, if you took these trades for US 30 and you took just, these 5 trades right here within, a few days and they all hit full TP, you could have easily passed this, even taking a small lot size. Like taking these right here, if you're taking maybe a 10 lot size on 100K count, let me just add these up right here. So that's like it's like 4 back-to-back wins. So right here, if you took all these trades, it's 1400. So 1400 pips times if you're taking a standard lot size, you just multiply that. Or if you take sorry, actually, 1400 times 4 for 4 wins there, you would have had 5,600 pips. So if you were taking like a 15 lot or maybe even a 12 lot, so you just do 1.5, you would have been close to passing your FTMO within just these 4 trades right here, because you need to have a profit goal of 10,000. So just these 4 trades right here, you would have made 8,400 if they all hit full TP, and then you would have been basically done with your challenge already within just a couple days, 4 days.
Yeah, like 10 days are enough. There's no need to go beyond 10 days because when you go beyond that, there's like a sense of confusion and a sense of doubt.
Exactly. Yeah. So like for me, when I trade, I only technically when I trade, I have my risk is about or my profit potential is about 2,250. So if our goal is 10,000, you divide that by 250, you only have to win about 4 trades, 4.5 trades. So you can pass within 4 days, and then you just take penny trades from there in order to pass the days, because you only have a 10-day minimum trading. So if you do the 10 days, then you'll be fine once you get to you have those 4 wins, and then you just go onto your verification, and then after that you only need 2 more wins to pass the verification, because if you're doing 5,000 profit target, you divide that by 2,250, you only need about 2.5 wins, or not even half, just 2 wins and then a small profit. And
Yeah,
then once you pass those two, then you're funded, you get your 100K account, and then you just do the same thing for the month. And in reality, you only need to have slight profit. You don't have to go for the heavy profits at that point, because now once you're funded, the main goal is not to lose the funded account. A lot of people don't like when they get funded, they get too confident. They want to, make hundreds of thousands of dollars, and then they end up losing the account. In reality, most people should be happy with, having only maybe 10, 20,000 profit a month, because even if you make like say 25,000 a month profit, or not even that much, that's overextending, maybe like 20,000 profit a month, you take your profit split of 70%, you get to keep 14,000 a month, you multiply it by 12, your take home is still going to be about 168,000. And that's just, trading FTMO. That's one account. If you have three accounts, like what I'm trying to build up right now, you could have a total profit of like 500,000 just trading FTMO, not having to risk any of your own money and
Yeah.
just trading safe. It's really about trading safe. Risk management is the most important thing. But it's like the most difficult thing for a lot of new traders to really understand.
I totally think 10% is okay, right? 10% is like enough for a month.
Oh yeah. So if you do 10%, that's only 10,000. It's not that bad. 10,000 is still fine because if you make 10,000 a month and then you're split 70%, you still take home 7,000 a month after the split. And then if you can do this consistently every month, which is very possible, you multiply that by 12, your take home is still going to be 84,000, which is not bad. And then if you have three accounts, you can multiply that to three, you'll make about 250,000. And that's annually. And at this point, you can start to move this money into your own personal account. That's what I do. So for me, my FTMO profits, most of the time when I make the profits, I'll just move that into my personal account. And then I'm trading like four accounts, or I think I'm trading about five accounts. So I'm trading two personal accounts, and then I'm trading three FTMOs right now. So my profit potential is like very high once you start to trade multiple accounts.
Yeah, so you trade with a trade copier, right? You trade one master account and it gets copied to another.
Yes, that's correct. I just trade my main FTMO, and then it copies over to my personal US30 account, two of them, and then my second FTMO account, 100K, copies to there as well. And then right now my challenge as well. So I have three FTMOs and then two personal accounts, and
Okay.
it just copies it over.
So which trade copier do you use?
I use this one. It's called Social Trade. Let me see if I can pull it up. Social Trader Tools. I used to use my own specific one that my coder built for me, but it had too many issues. So I use this one right here. It's not that bad. I think it's free for like a certain amount of accounts. Yeah, so like for like two accounts, it's only 20 bucks. And then I have this one right here because I have five accounts. So I only pay 60 bucks a month. And then I'm able to copy my trades to all five accounts. It gets a little it gets a little difficult depending on what your broker is because obviously the broker pricing is a little different. So for me, sometimes it runs into some errors with my personal account, but it's not that bad. Most of the time, it's pretty accurate, so I don't really have to worry about it. But this is the one that I normally use, social trader tools, and I use this to copy accounts from or copy my master account to the lower accounts.
Okay. Yeah, I get it.
Yeah. All right, cool. So you have any other questions? I have another meeting coming up soon, so I might have to get off for a
No,
little
no,
bit.
no. No. Thank you for the session.
Okay, perfect. Yeah. So if you have any other questions, feel free to reach out and then we can hop on another session. I'm pretty sure, once you practice more, you're going to probably run into some issues. And then,
Yeah.
at that point, we can go over this again, have another session, and then we can figure out where to fix those problems. Because like, with any strategy you apply, there's always going to be a solution. You just need to be able to identify, what the problem is. And then from there, we can figure out a solution to move on from that point.
Yeah. I'll just backtest it and get back to you then.
Yeah, definitely. That sounds good. All right, cool. So yeah, this was a good session. If you ever want to watch it again, it's on the YouTube. So if you want to, rewatch it later, just go on the YouTube and then you'll have it for today's date, the 28th.
Okay. Thank you, Sean.
All right, definitely, bro. I'll see you tomorrow. I'll probably see you in the live session.
Yeah. See you.
Definitely. See you tomorrow.